As 2026 begins, the United States stands at a pivotal economic crossroads, a moment that will shape the nation's future for years to come. The country is buzzing with both hope and uncertainty, as Americans everywhere try to make sense of the headlines and the realities they face each day. On one hand, the news is filled with stories of prosperity, record-breaking stock market highs, major companies announcing new investments, and a wave of innovation that seems to promise a brighter tomorrow. Yet, these headlines often clash with a growing sense of anxiety that's hard to ignore. Official reports tout booming economic growth, a surging stock market, and a technological revolution led by artificial intelligence. The rapid adoption of AI is transforming industries, creating new opportunities, and fueling optimism among investors and policymakers alike. The administration claims its policies are fueling an era of unprecedented prosperity, pointing to low unemployment rates and rising GDP as proof that America is on the right track. Leaders celebrate these achievements, promising that the benefits will reach every corner of society. Yet, for millions of ordinary Americans, the reality feels very different. Rising grocery bills, unaffordable housing, and healthcare costs that outpace paychecks are daily struggles. Many families are forced to make tough choices, cutting back on essentials or taking on extra work just to get by. In cities and towns across the country, people wonder if the economic boom is happening somewhere else, for someone else. The gap between the wealthy and the working class seems to be widening, with some neighborhoods thriving while others are left behind. This disconnect between official optimism and everyday struggle is a defining challenge of our time. While some celebrate unprecedented gains, others face mounting hardships, fueling debates about fairness and the true state of the economy. In this video, we'll dig into the numbers, the policies, and the real-world impacts, exploring who's winning, who's left behind, and why. We'll hear from experts, workers, and families to understand the forces shaping this economic crossroads. Is the American economy as strong as it seems, or are there cracks beneath the surface that threaten its foundation? Join us as we uncover the stories behind the statistics and search for answers in a nation at an economic crossroads. To understand the debate, let's look at the numbers. The story of the 2026 economy is one of contrasts, headline figures that dazzle, but also undercurrents that raise questions. Let's break down what's really happening beneath the surface. GDP growth is strong, 4.3% in Q3 2025, with estimates as high as 5.4% for Q4. That's the fastest pace we've seen in years, fueled by robust consumer spending, a rebound in manufacturing, and a surge in exports as global demand recovers. Major infrastructure projects and renewed business investment have also played a big role, signaling broad-based economic momentum. The stock market has soared nearly 30% since tariffs were rolled back, driven by tech giants riding the AI wave. Investors have poured money into technology, green energy, and healthcare, betting on innovation and future growth. The S&P 500 and NASDAQ have both hit record highs, and IPO activity is picking up again, reflecting renewed optimism on Wall Street. For investors, this means big gains and renewed confidence. Retirement accounts and portfolios have rebounded, and there's a sense of excitement about what's next. Many are seeing their best returns in over a decade, and financial advisors report a surge in new clients eager to get in on the action. But the job market tells a different story. Unemployment is up slightly to 4.4%, and hiring has slowed. While that's still historically low, it's a reversal from the rapid job gains of the past 2 years. Some sectors, like tech and retail, have paused hiring or even trimmed staff, citing automation and cost pressures. Companies aren't laying off en masse, but they're not adding jobs like before. Many are taking a wait-and-see approach, focusing on efficiency and productivity rather than expansion. This cautious mood is reflected in fewer job postings and longer hiring processes. Job openings are down, hinting at a possible slowdown. Fewer opportunities mean more competition for each position, and some workers are finding it harder to switch jobs or negotiate higher pay. Inflation, though lower than its recent peaks, remains at 2.7%, still above the Fed's 2% target. Prices for everyday goods and services continue to climb, even if the pace has moderated. Energy and housing costs have stabilized, but food and transportation remain stubbornly high. Essentials like food are up 3.1%, with staples like beef and coffee rising even faster. Supply chain disruptions and climate impacts have pushed up costs, and businesses are passing those increases on to consumers. For most families, these price hikes are what they feel most. Even as wages have risen modestly, they haven't kept pace with the cost of living, making it harder for many to get ahead or save for the future. The numbers may look good, but the squeeze on household budgets is real. Behind the headlines, millions are making tough choices every day, cutting back, searching for deals, and worrying about what comes next. What's behind these mixed signals? Government policy is a major force. Recent tax cuts and big refunds are boosting short-term growth. The Federal Reserve, after years of raising rates to fight inflation, is now expected to cut them, fueling market optimism. The AI boom is pouring billions into tech, driving stock prices and a narrative of American innovation. But new tariffs are raising costs for businesses and consumers, pushing against the benefits of tax cuts and AI. These conflicting policies, stimulus on one side, trade barriers on the other, create an unpredictable economic path. The result: a tug-of-war between growth and inflation, optimism and caution. Understanding this tension is key to making sense of today's economy. Tariffs have become one of the administration's most controversial tools. In 2025, tariffs jumped from just over 2% to nearly 12%, aiming to protect American manufacturers. But higher import costs have added a full percentage point to inflation, clashing with the Fed's efforts to keep prices down. Manufacturing, instead of booming, lost 68,000 jobs last year, hurt by pricier parts and global supply chain disruptions. Legal challenges to the tariffs add more uncertainty for businesses. Meanwhile, stricter immigration policies have shrunk the labor force, causing shortages in sectors like manufacturing and construction. Trade and immigration are now deeply intertwined, complicating the economic outlook. Artificial intelligence is the star of the 2026 economy, fueling a tech stock surge and dreams of a new productivity revolution. Investors are betting big on AI, creating a wealth effect that boosts spending and market confidence. But is this a sustainable boom or a bubble waiting to burst? For workers, the benefits are uneven. AI has mostly helped tech elites, not the broader workforce. Fears of jobless growth are rising, as automation threatens to widen inequality. So far, large-scale job losses haven't materialized, but the real impact may come in the next decade. For now, AI is both a symbol of hope and a source of anxiety about the future of work. The most striking feature of today's economy is the widening gap between the wealthy and everyone else. The top 10% now drive half of all consumer spending, while most families see little benefit from the market rally. This K-shaped recovery means the rich get richer, while middle and lower income households struggle. The labor share of GDP has fallen to its lowest level since 1947, as wage growth lags behind rising costs. For many, the system feels rigged. Booming markets and strong growth don't translate to better lives. This frustration is fueling political debate and public discontent. The American dream of upward mobility feels increasingly out of reach. Inequality isn't just an economic issue, it's reshaping society and politics. For most families, the economy is measured by the cost of living, not GDP. Housing is less affordable than ever. Rising rates and prices have locked out many buyers and driven up rents. Healthcare costs have spiked, with millions facing doubled insurance premiums after subsidies expired. Food prices keep climbing, forcing families to stretch budgets and make tough choices. These daily pressures overshadow positive headlines. The disconnect between economic data and lived experience is growing. For many, financial insecurity is the new normal. Looking ahead, experts are sharply divided. The administration predicts explosive growth, over 5% this year, thanks to tax cuts, expected Fed rate cuts, and strong consumer spending. Most independent economists are skeptical, forecasting a more modest 2 to 2.5% growth. They warn of headwinds, trade tensions, persistent inflation, and policy uncertainty. The risk of stagflation looms, with the Fed caught between fighting inflation and supporting growth. Rising national debt adds to the worry, as deficits climb even in good times. More government spending goes to interest payments, squeezing out other priorities. The future is uncertain and the stakes are high. So, Is the US economy booming, teetering on the edge of a bust, or transforming into something entirely new? It's a question on everyone's mind, from Wall Street to Main Street, and the answer is far from simple. The truth is, it all depends on where you look and who you ask. In some places, prosperity is obvious: gleaming homes, bustling businesses, and new construction everywhere. But just a few miles away, you might find boarded-up shops, empty lots, and families struggling to get by. On paper, the numbers look impressive. Record GDP growth, a stock market that keeps breaking new highs, and corporate profits soaring to unprecedented levels all seem to signal a robust, healthy economy. Yet for millions of Americans, this so-called boom feels like it's happening in another country. Rising costs, job insecurity, and the threat of layoffs make it hard to share in the optimism. High prices at the grocery store, stagnant wages that don't keep up with inflation, and a shrinking share of the economic pie for workers all point to deeper, more persistent problems beneath the surface. The administration's policies are pulling the economy in opposite directions, stimulating growth with spending and investment, but also fueling inflation and uncertainty that make planning for the future difficult for families and businesses alike. Meanwhile, the rapid rise of artificial intelligence and automation offers hope for new industries, higher productivity, and groundbreaking innovation. But it also brings the risk of a speculative bubble and the very real possibility of jobless growth, where technology replaces workers faster than new opportunities are created. The Federal Reserve faces some of its toughest choices in decades, trying to balance the need to control inflation with the risk of stalling the recovery. Every move they make, raising or lowering interest rates, tightening or loosening policy, carries enormous risks for markets, businesses, and everyday Americans. Ultimately, the real test of this economy isn't just about numbers or headlines. It's about whether growth truly lifts up everyone, not just a privileged few at the top. The coming year will reveal whether America is headed for a genuine, shared boom, or a painful reckoning that forces us to rethink what prosperity really means.